You're listening to eBizRadio, the place to go if you want to know about the world of business. For daily podcast and article uploads, go to eBizRadio.com or follow us on Twitter at eBizRadio Global. My name is Nick Snow, and joining me for an edition of eBizWires is Justin Keevy, Senior Underwriter of the Commercial and Cybercrime Division of Carmague Underwriting, niche insurance specialists in things such as clinical trials, commercial crime, financial institutions, and the like. Justin, thank you very much for taking the time to chat to me. It's an absolute pleasure to be discussing this with you. From someone who's in the insurance industry myself, I've never heard of these niche insurance areas, and I'm very much looking forward to finding it out. So I think let's start off from the top and tell us why the specialization in these type of services.
Thanks, Nick. Thanks for having us on the show. We operate as an underwriting management agency, and traditionally what's happened was the larger insurers didn't have the necessary skills or investment required to specialize in niche areas of insurance. So what we have done is we operate on behalf of the larger insurers, particularly Mutual and Federal and Lloyd's of London. So different
Right.
syndicates at Lloyd's of London hold the risk, and essentially we front the risk here in the local territories and in Africa for them. So
Right.
They hold the risk, and they take 50% of the premium and hold 50% of the risk themselves.
I see. So what you're utilizing yourself as a place to almost have a backup.
Sorry?
You're utilizing your business as a backup for these businesses.
Yes,
in case
exactly.
something goes
So
wrong.
the insurance, yes, and what's quite nice about that is that we use Mutual and Federal locally, so 50% of every policyholder's risk will be held locally, and 50% will be spread offshore to Lloyd's, the London market, which, as I'm sure you're aware, is a very large insurance market, very well established. So it's very good it's advantageous not to put all of your eggs in one basket. And it also lets us access the expertise of the Lloyd's market, which often is quite difficult to source locally. So we are in a very fortunate position. These sort of niche insurance products do require quite a lot of technical expertise to underwrite because of the catastrophe nature of them. Any one risk,
Yes.
we're putting out limits of indemnity or sums insured of around 250 million. So, that can, in 1 year, that a policyholder can have really catastrophic losses. So, if you're looking at medical malpractice, for example, we recently paid out a claim of 22 million rand plus VAT. So the quantums of the claims that we do see are very high. So that is sort of the need for the specialist space and for companies just focusing on the specialist niche insurance products.
Right. So one of the very interesting things I was picking up there is that you are splitting the reassurance risk, essentially. And now, surely every good insurer has a reassurer. And one of the questions that our producer here actually wanted to know is, what happens to the cycle of reassurance? Because if you are insuring someone else, you yourself have to be reassured, which is reassured, which is reassured. Is it a big circle? Or is there a point at which, someone has enough money to make sure that in the worst case scenario, everything does get settled fair and square?
Yes, look, that's an interesting question. All insurance companies, they should be buying reinsurance. So, there's the big ones such as Hanover Re or Munich Re, Swiss Re, and you can either purchase it on sort of a quota share or treaty type arrangement where, if you had car insurance, if the car crashed and the car's worth 100,000 rand, the insurer will retain 50,000 rand and they'll cede that risk onto the reinsurer. So the reinsurer will pick up that extra 50,000 rand for the loss. Otherwise, it can be on a facultative position, so you can do. And that specifically happens most of the time with big, larger corporate risks, where it's on each and every account basis or risk basis, whereas the insurer will approach a reinsurer for support on a big program, such as the likes of big telecommunications or utility providers. So, yes, risk management strategies and ceding risk to reinsurers is very important. The solvency margins and the regulations globally does require that insurers remain highly solvent.
Yes.
So it is a requirement. I mean, what you can do is it's all about managing risk, and if forming part of your risk management strategies of an insurer is to look at how much you want to retain for yourself. Obviously, the more risk you retain, the greater the premium, but higher the risk.
Yes.
And the more you want to see through to reinsurance or risk transfer strategies. So obviously, you'd have to pay for those ceding of risk. So it is quite an interesting space. The question where you said that does anyone ever have enough money to not buy reinsurance? The Lloyd's market, for example, is quite a complex market, and it's got different levels of financial security. And I think even their capacity in the market is somewhere around 27, 28 billion pounds. So a very, very big market. Yeah, if one layer of their financial structure burns through, it goes through to the next one, and then Lloyd's has their own fund to bail out syndicates that perhaps have exhausted their insurance and their reinsurance options. So it's always there to protect the policyholder. So I think reinsurance is extremely necessary, and it's quite a difficult question to answer in terms of will you ever have enough money to not look at risk management transfer strategies such as reinsurance.
So it's obviously, again, very, very, very complicated and very complex. But at the same time, I'm sure actuarial studies are done to make sure that the diversification of the risk is such that no one ends up in a precarious position where they cannot protect their policyholders. Because at the end of the day, you then wouldn't really be doing your job as an insurer. Let's chat a little bit about the commercial and cybercrime division. Now, we know that in South Africa, I just heard a story this morning about a swim swap where someone had an enormous amount of money stolen out of their accounts. Now, that would constitute cybercrime, would it not?
Yeah, so that is a form of cybercrime. So there's two forms of cybercrime that we look at at Carmague. We look at the theft of money and property. So it can be theft of the money and property under your care, so money in your bank account. It may not be your own money. It could be money that is in your account that you need to pay a supplier or something like that. So money that's in the interim in your account that's in your care, custody, and control. So we separate the theft of money and property from the liability attaching to cyber risk, which essentially is exposures emanating from computer networks and the internet. So we separate them both out. Cyber risk and cyber crime has become quite an interesting space over the last couple of years, as you can imagine. And the incredible pace, I think it's because the incredible pace of technology has produced huge dependencies on connectivities of companies and organizations around the world. So, we all pretty much connected all the time. But with that comes new risks, such as cyber liability to third parties, network security issues, business interruption, loss of data, and that sort of thing, as well as any regulatory and defense costs and all sort of complying with any legislation. So as a result of all of these things and the incredible pace of how technology has gone over the years, this has created a market where traditional insurance is ill-equipped to deal with. And that's specifically why we've sort of separated a portion of our business, focusing just on cyber and commercial crime. And if you think look at cyber liability, you think, for example, natural disasters, and you think that sitting here in South Africa and Johannesburg, we're not susceptible really to natural disasters.
Yes.
But you may not consider that your servers on your network are being hosted maybe in the States on a fault line on the East Coast somewhere, like California or something like that. So, although your current business may not be susceptible to that sort of risk, because of the global interconnectedness of computer systems and networks, you could have a situation where you have downtime on your network as a result of some natural disaster overseas.
Right.
So there are many risks, and we can go more deeply into those if you'd like to.
We can, or we can look at, obviously that's something I think a lot of people don't think about, is the interconnectivity part of things. I mean, when you're looking at the growth of industry, looking at the growth of business, is particularly in South Africa, a lot of people are unfortunately right now moving things overseas or moving business, the way they do their business or the servers, for example, over to other countries, and is it possible to insure over there but from a local position? Because I imagine part of a growth strategy of a business is to look at the type of insurance that you guys offer. So if someone had to come to you and say, listen, we want to expand our business, we want to go global, how would you go about assessing their risks? And obviously you can go into some of those extra risks that they may face.
Yeah. Yeah, I think to achieve growth, most businesses are looking at a global strategy, or most likely here in South Africa, they're looking at an African strategy. That seems to be the flavor of the month.
Yes.
And from a cyber risk perspective, there's new legislation coming into play called the Protection of Personal Information Act, and this act was enacted in November 2013. We're still waiting for implementation dates on that, so I think it's just sitting on the President's desk, waiting for them to sign it off. But once the Act is implemented, businesses will have 1 year to comply with the Act, and it essentially lays down a set of rules for the transmission, custodianship, and transfer of personal information. And if you do not comply with the Act, the information regulator, which they've already started formulating, can impose a 10 million rand fine on the business, or 10-year imprisonment for senior management. So,
wow.
So if a business is found negligent in protecting personal information, stakeholders who are affected, so if there is a data breach, confidential information gets leaked to the public sphere. Stakeholders such as customers can always take a class action against the business for non-compliance with the Act, but also it also allows for the regulator to take a civil action against the business, which can also result in these fines and penalties. And as I'm sure you know, that's as soon as anyone alleges anything in life, you have to start defending yourself. And the problem is that as soon as you start defending yourself, you incur legal defense costs. So before any award is made, you could incur a couple million rand worth of defense costs just trying to defend the matter and sort it out. So new legislation also does now pose a problem, or not a problem, but an issue that needs to be addressed at board level. And you think, businesses think, well, that doesn't apply to me, but the Act actually does apply to each and every natural and juristic person who are custodians of personal information. And yeah, it's a very, very interesting space. Small businesses that we chat to, and SMEs, which there are a lot of them in South Africa, they say to us, what is personal information? And the Act is very wide in that. I mean, it's your banking, your credit card details, your driver's license, your ID number, medical information, third parties, employees. If you think of an insurance brokerage, they've got a huge amount of information on their personal clients, their business clients.
You could pretend to be them.
They've got information on their insurers. They've got an abundance of information. A corner medical doctor on their system. I mean, they've got a huge amount of information on their database of their clients, so where they live, what their health history is, what their HIV status is, that sort of thing. So a lot of sensitive information across pretty much all industries. So that this will bring, I think, a new element to the way businesses address cyber risk going forward. But there's also other risks. There's also other risks such as hacking and that sort of thing, where traditionally businesses think that, or there was a misconception that it was all about theft of money. So that still is a huge portion of hacking attacks. But there are other motivations that have arisen over the past couple of years. I mean, just a couple of them is sort of just to get into that, is the demonstration of skill or thrill seeking. So, the FBI was always quite good at that. They was sort of hacking the syndicate groups, trying to position themselves as the best in the market from that perspective. So America has always want to lead the trot. They're quite big. The FBI is quite big in sort of just demonstrating skill and how they take down different cyber syndicates.
Right. Yeah.
Because obviously your cyber theft and cyber fraud doesn't have to be theft of money. It can be theft of a database, perhaps industrial espionage. Perhaps the business wants to hack into its competitor to steal its customer database, or perhaps download its strategy for the next 5 years, anything like that. Insider attacks, disgruntled employees. A big problem we've also seen in the past is that, especially these larger corporations, you have these cleaning staff that clean the office after hours. And what they do is a cyber syndicate will approach the cleaning staff and ask them to plug in a USB at the back of the computer. Yeah, and once either pay them 5,000 rand or a small amount, or they'll use a form of extortion where they'll threaten them to do so. And so what they'll do after hours when they're cleaning the computers and there's no one around, they'll just plug one of these devices into the back of the computers, And once they're in, and they can leapfrog. The syndicate can leapfrog essentially from that business onto other businesses that are connected to the core business. So very scary.
And it's so simple for them to get access. I think that's the thing that most people overlook, is it's not just about remembering your password and not keeping it in a safe place. It goes so much further than that. I mean, we're looking at encryption systems. We're looking at actual onboard. Is your antivirus up to date? Is this thing going to pick it all up? It's just so many levels. And I think, obviously the best advice would be to come to speak to you guys specifically. But let's go a little bit to the side here and talk about the focus of Carmague in terms of business insurance. Of course, you've made it very clear that it's something that's very important to you guys. But one thing I wanted to ask about was, we're looking on the website and we saw something about the Academy. Why don't you tell us a little bit more about that?
Yeah, thanks, Nick. So we dig into the training space, into educating our clients and broker database. So our sort of catchphrase here at Carmague is knowledge is power. So we believe that with the right knowledge and the set of skills and tools, anyone can go out and be sort of a fundi on liability insurance. So what we do is we have something called the Lab, which stands for the Liability Academy for Brokers. And what we do is we cruise around the country, as well as host events at our office. And we train our brokers and clients, if they'd like to come through, business owners, if they'd like to come through, if that interests them, on the various products and services that we do offer. So, from the 1 week at the moment, we're actually doing cyber liability at our office. So we'll take them through all the key risks, how to mitigate against those risks, what to look out for, what risk management and risk transfer strategies, such as insurance, they can implement. Not just insurance, but other ways in which they can mitigate against their cyber risks. We go from that to directors and officers insurance, whereby directors and employees in senior management or management positions can be held personally liable if they mismanage the business and they make negligent decisions in managing the business that result in financial loss to any of their stakeholders. So perhaps, the company, the management make a decision that puts them out of business. Perhaps they weren't attending all the board meetings and they are found to be negligent. Those customers or those employees that now don't have a job can essentially take an action against the directors and officers in their personal capacity. So, in their personal capacity, they can take that means that their houses and their cars and their children's private school education, and that is on the line. So, very, very real catastrophic, large quantum risks that are faced by businesses. So we tend to go through that. It rolls on through to medical malpractice, which is also a very interesting space. So where medical practitioners are found to be negligent in the operation of their job, and that results in any economic loss for the third party. So that's general liability, so slip and trip type stuff. Clinical trials, also quite an interesting space. Financial institutions, so we also quite big into all the big bank space, so the blankers bonds, so fraud insurance and third-party computer crimes and professional indemnity insurance for banks and financial institutions, asset managers, that sort of thing. So yes, we are big into that space. We believe that hopefully we train up our brokers, which are our customers, and they'll be more equipped to go and deal with key issues faced by their insured and those businesses, and empower those businesses to not only manage their risk, but to transfer their risk to an insurance policy and mitigate against any uninsurable risks that they may face on a day-to-day basis.
Right, absolutely. So, that's great. You're empowering both your clients and people who don't know more, and you're asking them to engage, which I think is so important. You're trying to make it front of mind for them, which I think is definitely the way to go about attracting the right people, especially to your practice. So I think the final thing that I have to ask you really is, if people want to get in touch with you, if people want to find out more about how you can help them protect their businesses as they, of course, seek to expand, how do they get in touch with you?
Okay, you can. Anyone is most welcome to visit our website. It's Carmague UM, so for Carmague UM for underwriting managers.co.za. Otherwise, you can contact us on 011-778-9140. And yes, that's how you get in touch with us. We're around 247 to help our clients and to empower businesses and sort of advise them on how they can manage all their different risks from a liability perspective, as well as help them mitigate against any uninsurable risks that they may be facing. So, give us a call.
Absolutely brilliant. Justin, thank you so much. It's been an absolute pleasure. I do encourage all our eBiz listeners to give them a visit, especially the website. Of course, you can find all the information you need there. It's been an absolute pleasure chatting to you today, Justin. Thanks so much for chatting to me here on eBiz Radio.
Thanks, Nick. Thanks for having us.